Hello, my name is Maria Bezubova and you're at my channel Fertilizers Jazz. Here we talk about events, trends, technologies in the world of fertilizers and agriculture. Please subscribe to the channel, put like to this video, and let's jazz! Today is September 15 and this is a weekly markets update. Let's have a look at the news of week 37 and see what are the next trends. Indian urea purchase tender was finalized with only 2 million tons issued in LOIs. The result is bearish for the market after acceptances hit 3.8 million tons. Purchases will be almost equally split between the west and east coast. In terms of supply geography, about 800,000 tons is expected to arrive from China, around 600,000 tons will come from Middle East, another 200,000 to 300,000 tons from Russia, likely several cargoes from the Black Sea, including both Turkmen and Azeri product will be heading, as well as 2 cargoes from Nigeria perhaps, and maybe 1 from Egypt. Coming back to the question that we discussed with you 2 weeks ago, what might be the timing of the next tender? Then, taking into account that only 2 million tons were taken, the next tender might come somewhere early October. So we might see 2 tenders more before the end of this year. After several weeks of no activity, Egyptian producers sold significant amounts last week. At first, they lowered prices dramatically to $420 FOB, but closer to the week end, the price jumped to $447 at small sale of 5,000 tons. The wide range of sales prices indicates that market hasn't found the balance yet as an aftermath of the tender. But in general, as already mentioned, the mood is rather bearish because a significant amount of product stayed unsold. Brazil doesn't show signs of willingness to step in yet, as price level is still too high for their barter ratio. However, some European demand was evident due to sharp drop of replacement cost, specifically for Bulgaria, Romania and Ukraine, as well as Turkey. That might provide some situational support to Egyptian and Black Sea market prices. But I believe that Egyptian price will not significantly increase soon. Black Sea product was also sold in a wide range between $400 to $420 FOB. Some tons will be heading to India, some were booked for nearby markets. In Nigeria, Dangote closed sales tender for 2 vessels for late September loading, but info about price and sales is not available yet. In the Middle East, producers were targeting to sell more to India, but many were left with tons available. Latest sales took place at $435 to $45 FOB range. Iranian producers moved their target sales price lower last week to $385 FOB and maybe lower, but there were no info about sales. In the US, some immediate demand before river closure in October supported September values at around $409 per short ton. However, October and November price indications are much softer than that. In Brazil, some buying interest emerged, but very limited though. The latest price inched higher to $435 CFR, which is still evaluated as too high, taking into account barter ratio. In Argentina, several sales were registered between $455 to $65 CFR. Ammonium sulfate prices softened more last week amid very slow demand. Chinese FOB copper price decreased to $140 to $45 range, and granular slipped slightly to $160 to $65. Brazilian buyers activated and started looking for some fresh cargoes amid softening trend. However, port inventories are still high. Also, Turkish buyers indicated interest for about 100 to 120,000 tons of product for November-December arrival, but most likely they will wait for price to go down more. Nitrates market was dead last week across the globe. In the ammonia market, global supply outlook has tightened considerably, with disruptions compounding global availability concerns. Ma'aden's outage is tightening the east of Suez market, with Taiwan, South Korea and India actively seeking product and likely paying up. There are rumors that outage might extend into 2026, resulting in the loss of at least 300,000 tons. Prices at Middle East FOB firmed by $20 to the range of $335 to $65. Iranian product flows, perhaps, will head mostly to India, not Turkey. This is already forcing Turkey to pay higher prices for alternative imports. Turkey's CFR price moved closer to the Northern African price, $500 and above, as there will be not much options available for October onwards. In India, price moved higher towards $390 CFR. In Europe, demand remains slow, mostly covered by contract cargoes. European production benefits from comparably cheap TTF gas price, reducing import reliance. In the US, prices also increased by $10 as export continued from only one plant, Donaldsonville. Activity in phosphate segment was low last week, in front of Ethiopian and Bangladesh tenders closure this week. The market was bearish amid almost non-existing spot activity. However, potential significant volumes that might be booked in the tenders can support the trend. Taking into account additional export quota from China, around 700,000 tons, most likely tender supplies up to November will be dominated by Chinese supply. However, later shipments will come from elsewhere. Price to India slipped a bit more on the fresh purchase of DAP cargo from Russia. However, the real indication is expected to be the new GSFC tender for 50,000 tons of DAP. There were 4 offers from Fertistream, Agrifuels, Ameropa, and Hexagon. Fertistream's offer was L1 at around $800 CFR, while offers from the other suppliers were at $805 to $6 CFR. The negotiations are ongoing, so we will know the final outcome later this week, perhaps. India's import pace remains strong, but mostly covered by contract volumes with no spot purchases. Other than India, the activity was very low across the globe. In Europe, Moroccan OCP and Tunisian JCT reported sales at slightly lower levels versus previous week. European phosphates demand continued to be skewed towards NPs amid high DAP price. In the US, several barges of DAP were traded in the range $780 to $85 per short ton, which is $5 to $10 lower versus a week ago. No MAP deals were concluded, though. In Brazil, nominal price of MAP remained unchanged, with no fresh trades happening. Despite the general bearish sentiment, increasing sulfur price might support the level at least unchanged. With higher sulfur prices, phosphoric acid price for Q4 will likely roll over. Moving to the fundamentals. European natural gas futures climbed above 33 euros per megawatt hour during the week as geopolitical tensions intensified. Israel's strike on Hamas leadership in Qatar raised concerns since Qatar remains a key supplier to Europe, leaving markets wary of possible disruptions ahead of the heating season. At the same time, Russia launched heavy drone attack on Ukraine, with several drones breaching NATO member Poland's airspace in what its military called an unprecedented violation. The EU is weighing new sanctions targeting Russian banks and energy firms to pressure Moscow. Despite these risks, Europe's storage levels stand at almost 80% capacity, which is the November target. Additional support comes as maintenance on Norway's continental shelf winds down, ensuring improved supply flexibility in the weeks ahead. US natural gas futures fell below $3 per MMBTU amid weak LNG export demand and robust storage. Government data showed a larger than expected storage build for the week ending September 5, about 25% higher compared to 5-year average. Despite forecasts for warmer weather and stronger demand, abundant inventories continue to pressure the market. In addition, gas flows to LNG export facilities are down August records. At the same time, output also slipped slightly below the record reached in August. Agricultural commodities future prices were supported by September WASDE report that was published on Friday. Wheat futures surged around $5.2 per bushel after report showed higher exports and lower US ending stocks. US wheat exports were raised by 25 million bushels, driven by continued strong sales and shipments of hard-red winter wheat, while ending stocks were trimmed by the same amount, slightly below last year's level. Globally, wheat supplies are projected higher, supported by stronger production in Australia, the EU, Russia, and several other major exporters. World trade is also slightly higher, with gains for the US and Australia offsetting declines for Russia and Ukraine. Corn prices climbed towards $4.3 per bushel, their highest since early July, as traders digested an unexpectedly tight supply and demand balance despite record US production. The September WSD report lifted 25-26 US corn output to a record on larger acreage, even as it trimmed the yield slightly, while exports were raised to a record almost 3 million bushels. At the same time, ethanol and feed residual use remained firm, and US export demand is running up against global competition. Soybean futures rose to $10.45 per bushel, marking a 9-week high. The report outlined a 25-26 outlook with higher US production, higher crush, lower exports, and larger ending stocks compared to August. Production was estimated at 117 million tons, with gains in harvested area offsetting a slight yield reduction to 3.6 tons per hectare. Crush was raised by 400,000 tons on stronger soybean meal exports, while exports were trimmed by 560,000 tons due to greater competition from Russia, Canada, and Argentina. Ending stocks rose to 8.7 million tons, signaling more comfortable supplies. Moving to the shipping industry. Containerized freight index dropped by 50 points last week, mostly due to decrease on Asia-Europe routes. Spot rates there fell by 10% on Shanghai-Rotterdam route and by 12% on Shanghai-Genoa route. This decline comes as carriers struggle to match increased capacity due to new vessels entering the trade, with softening demand. With a rise in blank sailing ahead of China's Golden Week holidays, which begins on 1st of October, industry experts anticipate rates to decrease slightly in upcoming weeks. Trans-Pacific spot rates were on the rise, on the contrary, last week due to general rate increase announcements by several carriers. Spot rates from Shanghai to LA increased by 6%, while those from Shanghai to New York modestly by 2%. The Baltic Exchange Dry Index increased last week. In the Capesize segment, positive sentiment was observed across both the Atlantic and Pacific basins. In the Panamax sector, the week was very optimistic, with steady rises throughout the Atlantic and Asian markets, although as the week ended, seemed like the market has reached a period of consolidation. For Ultra-Supramax segment, it was a positional week overall, as the Atlantic remained mostly firm, whilst the Asian arena saw demand retract and rates ease a lead. Panamax segment displayed a mixed performance. In the continent and Mediterranean, activity was limited with only marginal improvements. The South Atlantic maintained its momentum, showing balanced conditions with continued support. And by contrast, the US Gulf softened due to weaker demand. Meanwhile, Asia remained subdued, with fundamentals broadly stable. To sum up, final results of the Indian tender confirmed the bearish tone in the market. Booking only 2 million tons, India left suppliers with significant volume on hand that will weigh on market sentiment. On top of that, spare tons remained mostly outside of China, as Chinese volumes will represent the largest chunk of supply to India now. Demand from Brazil is still lagging behind, and European demand, despite the recent spike, is not in place yet. So all factors are actually bearish. Ammonium sulfate further price deterioration only confirms this tendency. Ammonia price continued firming both sides of Suez amid the news that supply from Ma'aden might be limited until the next year. Activity in the phosphate segment was very limited before major tenders in Ethiopia and Bangladesh will be closed this week. The trend is generally declining, but if the targeted volume is confirmed in the tenders, might reverse again. Natural gas price in Europe climbed amid geopolitical tensions between Israel and Qatar, as well as Russia and Ukraine. At the same time, price in the US dropped amid lower consumption and strong production figures. Future prices for all crops increased after September WSD report showed tighter supply-demand balance versus previous expectations. Container shipping rates slipped mostly due to decrease on the Asia-Europe route. Bulk shipping activity intensified as demand increased across segments and geographies. So, let's see what is next around the corner. But it will be already next week. Thank you for watching. Please subscribe to the channel, put like to this video, push the bell in order not to miss any updates, and see you soon.